Good morning, students. Before we move to the calculations part of this chapter, I wanted to get done with this last section first, which is about the reserves in the balance sheet. You kept coming across this word here, reserves, in the previous slides. If I refer to the slide right before this one, here in 2009 they said a reserve had been created for 20,000 in the general reserves, and in 2010 there was a reserve created for fixed asset replacement for 25,000. Now what is a reserve? Actually, what do we do with it? What is the purpose? How are they created? Where does the money come from? Everything I'm going to discuss it with you now today. So there are two types of reserves in a company. The first one is a revenue reserve. Okay, now what is a revenue reserve exactly? These are the reserves transferred from trading activities of the company. What are the trading activities of a company? Buying and selling. That is what trading actually involves. Now when you buy in order to resell, the main purpose behind doing so is to make a profit. So these reserves are created from the net profit and set aside for future use. These appear under the general reserve. That means a revenue reserves, the first kind of a revenue reserve is a general reserve. So you take the money out of your net profits, you put it aside for a specific future use. For example, here there was a fixed asset replacement reserve created for 25,000. You took this 25,000 out of the total amount of 66,164 and put it aside for future use. So this is an example of a general reserve. Now another type of revenue reserve is the retained profit. Retained profit is the balance of profit remaining after dividends, that is the profits for the shareholders, and transfers to reserve accounts have been made. So if you recall, let's go back. The profits were, let's say for the year 2009, the profits total was 59,664. You transferred 20,000 to the general reserve. Then you paid the dividends, preference dividend 5,000, ordinary dividend 16,000. The remaining money left after all these three, sorry, can you even see that? I'm so sorry. Yeah, sorry, now referring to 2009 again, sorry the data was missing there. Okay, so what happened here was, transfer to general reserve was for 20,000, dividends paid were for 5,000 and 16,000. The total money paid from the total of profits was 41,000. This remaining money, which was still left with the business after they had paid the profits, after they had put the money aside in the general reserve, 18,664 was left, and we called it retained profits carried forward to next year. Now moving back to our slide in question. So what is a retained profit? The balance of profit remaining, please remember, remaining after the dividends and transfers to reserve accounts have been made. Next comes your capital reserves. What are capital reserves? Unlike their revenue counterpart, these cannot be used to pay dividends. The most common capital reserve is the share premium account. So the money in the capital reserves is not used to pay dividends. However, the money you were paying here from your revenue reserves, from your profits, this money you were paying, these were your revenue reserves you were talking. These were the revenue reserves you were talking about. And these reserves were created from the profits. Now in the capital reserve, however, the most common example is a share premium account. What is a share premium account? Remember, reserves are the extra amount of money you've put aside for later use. A share premium account arises when shares are issued at a premium above their par value. For example, let's say my company's share value is $1. But currently, it's trading at $3 in the market. So when I sell new shares for my company, they will be sold for $3 each. So it means I am making $2 extra. That $2 extra is my share premium. Share premium I am earning by selling one extra share. So this will go to the share premium account. So the money you are making over and above the par value. Par value means the nominal value, the stated value of your company's share. The extra money you're making over and above it will go to the share premium account. We call it the share premium. It is, premium means something extra you're earning on the sale of your shares. So these are the two kinds of reserves I needed to discuss with you before we proceed on with the question solving part, more practice part. Remember, students, please, these type of questions, this data, all the theory I have covered so far in this chapter, reserves in the balance sheet, appropriation account, what is director's remuneration, debenture interest, and everything, okay? Share capital, ordinary preference shares, dividends, authorized and issued share capital differences, all of these things, please expect them to be tested in your MCQs part of the question paper and the short question and answer part of the question paper. Rather, you can always have a 5 to 6 marks question on the differences between define and distinguish between the reserves of the balance sheet, or define and distinguish between the different share capital of a company. So you should be prepared as to what comes. So please make sure that all of these tips, all of these terms are on your fingertips. These are important terminologies related to your company accounts, and you should all be very well versed on all of these terms for future references. Thank you very much. I'll be signing off for the day. Have a nice day. Bye.